Today we are embarking on a thrilling journey through the clandestine world of dividend stocks, where a staggering $2.8 million portfolio is shrouded in mystery no more. This is not just about numbers, it's about the revelation of a carefully guarded strategy that transformed an ordinary investor into a secret millionaire. Brace yourselves to the financial secrets, insights, and incredible lessons that will empower your own wealth building journey. Let's start by taking a peek into the Dividend portfolio, which has been built up over the years. As of September 5th, the portfolio is valued at a substantial $2.8 million US. It's divided into 3 accounts, and we'll walk you through each of them. First up, there's an individual retirement account, holding $1.25 million in dividend stocks. Now, some might wonder why it's not a Roth IRA. The simple reason is that Roth IRAs didn't exist when investing began, and the opportunity to open one was missed. Next, there's the $1.39 million of dividend stocks in the taxable account. It's a significant portion of the portfolio, and insights into the investment choices will be shared. Lastly, there's a retirement account for the spouse, with approximately $169,000 worth of dividend stocks. We'll explain why her retirement account isn't as substantial as the main one, and it's an important lesson for all investors. One thing to note, on the day these screenshots were taken, the markets were in the red, and all 3 accounts were down by 0.44%. This translated to a temporary decrease of around $12,000 from the previous market close. However, when it was head for the long haul, these daily fluctuations became less important. As the portfolio grows over time, there will be larger daily swings, especially in volatile markets. However, as dividend investors, the focus is on that steady income stream, which tends to trend upward over time, regardless of market ups and downs. Now, let's take a closer look at how the portfolio appears within Fidelity. When clicking on the balances link, it displays a balance for each of the accounts, including the overall change due to market movement. In the IRA, you can see it ended at $1.25 million, down by $6,100 compared to the previous close. Additionally, it shows $502 available for trading in that account, which increased by $205.41. This $205.41 is from a Pfizer dividend received in the IRA. Prior to that, there was $296 in cash from a previous dividend. The activity link provides a snapshot of recent dividends, including the Pfizer dividend in the IRA. When dividends first appear in Fidelity, they have a processing status before becoming withdrawable in the account, usually around 10 p.m. Pacific on the payout date. Looking at these recent IRA dividends, there's also a small $1.22 interest from a Fidelity money market account called SPACs. This is where dividends go until they are withdrawn. There's no longer a grip on this since retirement, and dividends are now used to cover expenses. After these money market account activities, there are dividends from stocks in the portfolio. There's a $164 dividend from Starbucks, $131 from British American Tobacco, $269 from Caterpillar, $319 from Apple, and a whopping $526 from Realty Income. Most dividends come from the taxable account, which is set up to automatically transfer them to the bank checking account as they arrive. However, dividends are also withdrawn from retirement accounts even before reaching the age of 59.5. This withdrawal incurs a 10% tax penalty. It's worth noting that the majority of taxable account dividends are essentially tax-free, as they are mostly qualified dividends. Nonetheless, there are plans to consult a tax advisor in March to explore the possibility of implementing a 7-2-T strategy, allowing withdrawals from retirement accounts without incurring an additional 10% tax penalty. Now let's delve into the dividend stock holdings, starting with IRA account. Let's explore a few stocks within each account in Fidelity. But for a comprehensive view of the total shares owned, we'll turn to the spreadsheet tool. This is Fidelity's dividend view, sorted alphabetically by ticker. And here's the first of 2 pages of stocks in the IRA. Across all accounts, there are holdings in 27 different tickers. You'll notice many of the same stocks in both the retirement and taxable accounts. The first ticker you see is for stocks, indicating there's $502 of cash in it. It offers a nice 4.98% yield, although it's expected to gradually trend down in the coming months. You might wonder why not sell everything and move into a higher yield money market, especially with current high rates. One significant reason is the confidence that staying invested in stocks will yield better results over the long term compared to attempting market timing and selling during periods of high rates. Now let's focus on the first stock in the IRA, Apple. There are 1,330 shares of Apple in this account, valued at about $252,000, representing 20% of the market value of the IRA. It has a modest yield of 0.51%, equivalent to an annual yield of $1,276. The majority of positions in the accounts comprise whole shares due to the absence of fractional ones during the transfer from E-Trade to Fidelity. Additionally, DRIPs were disabled as dividends income was utilized. As a result, only stocks added post-transfer possess fractional shares. One may question why some individuals retain stock with minimal dividends. The rationale lies in sufficient income from these stocks, enabling both income enjoyment and potential stock appreciation benefits. Should they desire more income, they can trim low-yielding stocks to invest in higher-yielding stable options. In the IRA, there's a holding of $36,000 in APV yielding $1,462 annually, alongside a smaller BTI position with a $621 yield. The majority of PTIs are located in the taxable account. Please note that Fidelity doesn't automatically update estimated annual dividend income for international stocks based on currency fluctuations, whereas my spreadsheet does. Thus, the BTI estimated income in my spreadsheet may vary from the provided figure. Skipping detailed totals, the remaining IRA positions include Caterpillar, Colgate, Palmolive, Chevron, Duke Energy, Goldman Sachs, Johnson & Johnson, and Kimberly-Clark. In the taxable account, there are 408 Apple shares worth $77,000, yielding $391 annually. ABV holds approximately $61,000, generating $2,462 annually, followed by BTI with around $85,000, yielding approximately $9,000 annually. The list continues with Colgate, Palmolive, Chevron, Duke Energy, and a unique position, Enterprise Products Partners (EPD), valued at approximately $128,000 and yielding over $9,500 yearly. These dividends should be tax-free, as they are considered a return of capital for the next decade. Additionally, the list comprises Johnson & Johnson, Kimberly-Clark, Coca-Cola, and McDonald's. Moving on to the next page of dividend stocks in the taxable account, the total value is approximately $1.39 million, yielding almost $61,000 a year in dividends. The positions in this account encompasses Altria, Microsoft, Realty Income, Pepsi, Procter & Gamble, Philip Morris, SDHD, Southern Company, and ExxonMobil. For some fun insights, here are the most recent dividends received in the taxable account. On August 23rd, there was a dividend from BTI for $1,915, followed by 55 cents of interest income, a $98 dividend from Apple, and a small dividend from Realty Income. In the realm of dividend stock investing, the taxable account recently saw action with the acquisition of Realty Income Corporation. Despite less favorable tax rates on dividends in taxable accounts compared to qualified dividends, the allocation of most royalty incomes is directed towards retirement accounts. Following this, a significant $292 dividend came from Procter & Gamble, $196 from Colgate-Palmolive, and $615 from AVI. Tuning to the Fidelity retirement account, it holds a market value of $169,000 and yields $7,400 annually, consisting of ABV, BTI, Home Depot, J&J, Altria, Realty Income, Toronto Dominion Bank, and Travelers Companies. The total estimated annual dividend income across these three accounts approximates $100,800, with considerations for currency fluctuations with BTI and Toronto Dominion Bank. The dividend spreadsheet made available to Patreon supporters organizes stocks by size. Visual cues highlight pay rates such as Apple's 738 shares, comprising 11.7% of the portfolio. Real-time pricing updates indicate that, on this day, Apple closed at $189.72, marking a gain of 26 cents, 0.14%, contributing $451 to the $329,000 position. Columns for ex-date and pay date align with the ticker's color code. Apple distributes $479 quarterly, summing up to $1,668 annually. Additionally, there's a holding of $262,000 in Microsoft, generating $2,100 annually. $163,000 in Coltria with annual yield of $14,500, $157,000 in Realty Income resulting in $8,700 yearly, $727 a month, and $155,000 in J&J yielding $4,600 annually. The portfolio encompasses 31,435 shares valued at $2.8 million, averaging 3.5% 5 yield with 7.35% dividend growth rate. The dividend calendar outlines projected income for September expected to be $9,581. August paid $8,450, and October is anticipated to bring $7,196. In the fund section, there is a forecast for dividend income trends, both without any drip. By the 10th year, without DRIP, it could reach $205,000 annually, or $287,000 with DRIP. The sector graph illustrates tech at 21%, consumer staples at 16%, and energy at 12%, serving as significant contributors. In conclusion, steadfast investing in dividend-paying companies spanning 3 decades underscores the foundation of financial security. If you found this video informative, please hit on the like button and subscribe to our channel.